The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. We'll start out. We have a couple questions from our loyal followers here at TFNN, and then we will go on to take a look at some of these commodities because there's a real bloodbath going on over there, and they don't appear to have any bandages. So we'll see. The first chart that I've brought up today, actually the second one, first one was the Australian dollar. I was going to relate that to the commodities also, but we'll do the Starbucks first. We've been watching this pattern here in Starbucks on the weekly basis. We've gapped up here quite a bit the last few days. We've been hanging around that $56. Now, if something would happen today that Starbucks would drop more than $1.25 a share, which is probably impossible. But if it were to do that, it would leave an island reversal on the weekly basis, and that is the most dangerous of all patterns. As you can see here on the Starbucks chart, going back, through 2012, we've made a perfect ABCD pattern. It's gone right up to that 55 level. It's really been really something of a real monster bull market, and I don't know if Starbucks has found a cure for cancer, but maybe close. They're also, we got lower coffee prices, and as we have lower coffee prices, what does Starbucks do? They raise their price of coffee by 8%. I don't understand how that happens, but we'll see. Anyway, this is what we're looking at here in Starbucks. It has to gap down. It doesn't have to do it today. It could do it sometime this week. If it just backs off a little bit, and then on Friday closes at say 55.10 or something like that, that's when you would I would buy puts, and just if it gaps down, you're going to make a lot of money on Monday. And if it doesn't gap down, you just get out and you won't lose anything hardly at all unless they gap it up $6-7, which who knows. Anyway, that's what we're looking at here in Starbucks right now for this morning, and we'll see what happens. We're having some weakness across the markets early this morning, but frankly that could change. The markets have been extremely bullish, and bulls dive very, very hard, as we all know, and we'll see what's going to happen here in the near future. Okay, I guess we'll take a look here. We'll take a look at the NASDAQ because we looked at that yesterday, and we'll see what we're doing here. Just give me 1 second to get this ready. Okay, I hope this is the one. Alrighty, yeah, there's what we're looking at here, the NASDAQ. Give me a second, and we'll take a look at it here. Alrighty, this is where we were. We were talking about the this swing that we were seeing in the NASDAQ, where we had multiple ABCD patterns happening, and we'll see what's going on, from that level. But this is only the second day down in the move, and usually after a 10-day up move, you're going to get a 3 to 5 day correction. The Fibonacci, the 618 doesn't come in to around 4,500, so who knows? Remember, markets that go straight up have a tendency to go straight down, so keep that in mind also. But it's still early in the day. They could rally and get this thing positive. You just never know, because that's just the way these markets are running. Fact is, one of the next question that we had was about Chipotle Mexican Grill. This stock was down about 7% pre-market after the post-market, after the earnings came out, because I don't know what it was that did it, but I was just watching the news because I wanted to see how the markets responded to it, and it was down quite a bit, and then it turned around to be up 2%. So it had a 10% swing, in the move in the market. That was after the earnings came out, so they probably changed the way that they were going to look at same-store sales or whatever it happens to be. I don't know how that stuff works. That's why I'm a technician, folks, because none of this stuff makes any sense to me. It really doesn't. I mean, they talk about things that are important in life, then who knows. But if you'll take a look at Chipotle Mexican Grill, you'll notice here that there's a huge island reversal up here that we talked about, I believe, at the time it was happening. I'll post this in here, and you'll see it marked in the big red box here, because that's where the market broke down from. We rallied right back up into that same gap area at the 61% retracement back on April the 19th, and then we went down and made the ABCD pattern where the market had a 10% thing. So this is I don't know what the volume is on this stock. I've never traded it. I've never eaten at a Chipotle Mexican Grill, so I don't know anything about it. I really don't. I'm a Taco Bell man. Burrito Supreme is my game, so that's basically what I'm looking at when I'm watching some of these things. Okay, let's get to where the real problem lies, and that's in the commodity markets, folks. We have some really serious things going. We got gold almost ready to break down again below the key level of 1085, and I just wanted to show you this the bull bear thing one more time, because we have so many people that are that are so there's just no more bulls left in the gold market. At least that's what the gold bull bear index is telling us. The last time we had this few number of bulls in the gold market was back in 2001, March of 2001, when the gold was trading at 265, I believe, before it went to 1962. So there's some cycles here, but the overall bearishness is quite prominent here. And then if we looked at the gold stock, that the gold, let's just do a couple. I have a question. Someone asked me a question about American Barrick, but let me do the gold first here, and then we'll move on to American Barrick, because we've hit all of these objectives with the exception of one, and that's this. Actually, there's two. There's one at 1069 here in the gold that we could make without too much trouble. There's an ABCD there, and then there's also an ABCD at 1046. So we could get below 1046, folks. You're going to be looking at triple digit in gold without too much trouble. In fact, you could probably be looking at triple digits, no matter what. Now, if you'll give me 1 second here, I wanted to show you something interesting on gold. I don't think it means anything. But let's just take a look at it on the really long-term basis, and you'll see that gold is sitting right at the 50% level of the low from 2001. Now, not sure if this means anything or not, but you've got enough people bearish and nobody bullish that this is where you usually get some monster rallies from. Am I involved? No. I'm respecting those wide-ranging bars down. Last night, if you looked at gold just on a really short-term basis, we made a little Gartley there at the 786. That was the easiest place to take a shot at it, and that came in at 1086. And I'll put this up for you, and we'll see if that's going to be the case. But that's the first time we've had a low-risk entry opportunity in the gold market, if that's the case. So that's what it looks like with gold. We've been talking about this for a long time, that once we start breaking these levels, this is what happened to crude oil, folks. If you remember when we broke 90, then we broke 70, and then we broke 60, this is the same type of thing. These things go into free falls. Now, this is one of the questions that I've always had about the stock market. I mean, how do you get the stock market way up in the air? I mean, I can see it with the NASDAQ stocks that they're doing like that. The New York Stock Exchange Index stocks did not do that. They were not rallying like that. But if you've got airline stock prices going, just straight down, and they have a perfect storm. They've got low oil prices. I mean, that's most of their expense is fuel, and they're not going up. And if you look at the Dow Jones transportations, folks, I mean, something's not right with this picture. this economy, there's got to be something wrong with it, because for heaven's sakes, they got to move the goods somewhere, don't they? I mean, I'm not a rocket scientist, but you don't have to be a rocket scientist when you look at a chart. I mean, something's not right. Look at this Dow Jones Transportations. This thing has been going down for, how long has it been going down for? Since December. It's been going down for 7 months. That's a huge amount. So who knows? Oh, I have an announcement to make. I'm going to do a free webinar for all the subscribers to the Fibonacci 24/7 service that we have. It's going to be free. So if you want to try the service for free and listen to the webinar, it's going to be on Monday the 27th. What I'm going to do is I'm going to explain how I set some of these things up and what I think are the best trades coming over the next 3 to 4 weeks. And I think we're going to have some really, really big volatility, because we haven't had any yet. The volatility index for stocks has, just made a 9-month low. So that's telling us that we haven't much happening. So if you have an interest, contact TFNN. That's www.tfnn, and you can get into the webinar for free. And I think you get a couple weeks or a week or so of the service. And we were fortunate enough to get the Nasdaq off yesterday as a short right near the open yesterday, and it was the day before yesterday. It was yesterday, yesterday, and that's the other thing. We're short some corn, and we also happen to be long some silver, but I don't think we're going to be long silver after that. We bought it right, but it's just not going to be the amount of money that we'll lose here will be pretty much insignificant given where we bought it. But we're short corn. It's working really good. We're short Goldman Sachs. We're short the IWM, and we're short the Nasdaq, and one other one. We took our profits in the long dollar position, and one other profit yesterday. I don't remember it. But anyway, this does not make sense to me that we're not in a really, really strong bull market. And this is such a bearish Dow divergence of the Dow theory, where you have the Dow transportations going down, the Dow utilities going down, and they're also in a pretty significant bear market. And you can see that here, where this market rallied back to the to this 20-minute line one more time, and it was really interesting to see this thing as the pennant broke out. You'll see this very easily here, because they have a tendency to take a look at this very quickly. We have a request here to take a look at platinum, but I'm afraid we've got to pay a few bills here in a minute. But when we come back, I will cover the platinum market. But this Dow Jones Utilities also in a major downtrend since December. Actually January. The transportation's topped in December. The January was the high for the utilities, and the rest of the market actually topped on May the 19th, except for the Nasdaq, and that's in a world of its own. Okay, we'll be right back after these few words, and the stock market will be opening soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've been asked to take a look at platinum. And we will be looking first at the daily chart of platinum. And as you can see, you know, we've been a really strong move down with an ABCD pattern. But I think as you can see, we were coming down very quickly, and we have been for a long time. It's been in a bear market since 2011 in platinum. So we'll see what happens next. Now we're going to take a look at the long-term chart here on platinum going back to 2008. You see we're up around 2,200 when gold was at 1,900. There was a $300 premium of platinum over gold, and now we have a $100 premium of gold over platinum. So platinum has lost its luster, to say the least. And as you can see here, we held at the 61% retracement for about 3 months during November through January. And then in January, we started down again, and we broke through the 786, which was at $1,000 an ounce. We did that yesterday. And so we've broken down. Now, if you look at this weekly platinum chart, you'll see that there is an ABCD pattern on the weekly chart also coming down here, but it's below the 786. And this is why we're at such a critical level here in gold. We have other, and you have to look at gold because platinum, you know, not many people trade platinum. I'm sure there are some, but I frankly haven't traded it in well over 10 years because it's so easy to trade gold and silver, and that's where the real action happens to be. So we'll see. Now, silver silver has not taken out those lows yet, but that's the only hope that the gold market has is silver. And frankly, the chances of that happening are like those two cowboys here in Arizona, the Chance brothers, slim and none. So we have a tremendous bearish, I guess, what would be called consensus in the metals. I don't think no one can argue with that. Looking at the bull bear index. If you look at the gold silver index, the same thing. We have tremendous bearishness there. So I think if you wanted to buy platinum, you got to risk about $20 an ounce from here. But frankly, the better place to buy it would make sure this bottom holds. This is Wednesday. I wouldn't look at it until early next week. And if that bottom is held this week, then yep, I think you got a chance that you could possibly take a look at the price of this stuff, and then you might have a better. But right now, the risk is just a little bit too great, in my opinion, to try it. So we'll see. Okay, that's it. Now, we have another question about the 20-man line that I mentioned about the utilities. And the 20-man line is basically a pattern that my good friend Jim Twentyman, Jim was my first broker at Clayton Brokerage back in 1965 on Wilshire Boulevard in Los Angeles. And he was an expert technician. He still is, and he still trades very actively. He just had a birthday, and he's visiting his 95-year-old mother up in Syracuse, New York, right out little town of Homer, New York, right outside of Syracuse as we speak. But the 20-man line is basically where a market pulls back to a trend line that broke out. And as you can see here with this banking index, we had a trend line from January through March, and the market broke above it, and then it pulled back exactly to it in a nice little 3-day pullback, and that was back on May the 11th. And from there, it took right off. Now, there's also an interesting pattern here in the banking index. As of yesterday, we have a potential shooting star pattern. As you can see on the far right side, yesterday's action, where the market was higher, making new highs, and then closed in the lower part of the range. That is a shooting star pattern, and that is the opposite of a hammer pattern. And those are two of the more powerful patterns in candlestick charting. So if we gap down today in the banking index, that would also be an indication that we would possibly be getting ready for a little more severe correction than some of the folks are looking for. Frankly, the S&P 500 is holding up extremely well, and we'll see what happens at the end of the day. But right now, it's holding up above 2100, which is, people call it a key level. I don't see that much of a key level in the S&P at 2100. 2089 is a key level, but I don't see 2100. It's a even number, but whether that means anything or not still remains to be seen. We'll just have to wait and see. Apple's going to be under some pressure this morning. We'll see. The whole world watches Apple. I mean, more people own Apple than anything else, and it's a one-way Corrigan with that thing. So if these folks panic in Apple, folks, it's not going to be pretty. I don't think they will, because you've got too many people bullish, and when the market gives them a chance to buy it lower, they'll buy it lower. So don't be surprised if we see one heck of a rally here sometime midday. Okay, we'll take a little break here. We'll come back. We're going to talk about the bond market.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to go through the bonds and notes here. Those are the boring markets that we have out there. The first one we're going to look at is the German Bund. As you can see, we've been in a downtrend for quite a while, especially since May. We've had some lower tops in here. We're in the midst of a 786 rally today in the bonds, with the U.S. doing the same thing as the German Bund does. Now, the German Bund yields less than the U.S. bond, because it's viewed as a better quality bond than the U.S. bond. So we'll see what happens with that. Now, the next one we want to take a look at is the Treasury notes. That's another one that's the largest traded future that we have here. In fact, it's the largest traded future in the world, since we have the largest commodity markets in the world. That's what we're looking at right here. And as you can see here, we've been in a really downtrending move here in the notes for quite some time, and we are in the midst of a very small 5 or 6 day rally. Actually, it's a 7-day rally. We took out the highs of the 17th, the 15th, by just a tick or two in the notes. So there's a potential here that we could start down here, meaning higher interest rates, which, I don't understand. The Fed has a perfect storm to raise rates, and yet they're not doing it. So we'll have to see what's going on with that. We'll have to wait and see. Anyway, so that's what we're watching right now in the notes and bonds and crude oil. Now let's crude oil. My mind is on crude oil. Happen to be short this one. Hold on just a second here. We want to take a look at crude here, and we'll just look at it a couple different ways. We'll start out looking at it on the half-hour chart, and you'll see that we have a market that has just taken out the lows of yesterday. And so we are still heading down. If we look at crude oil on the daily basis, you'll see that we have just broken below the 61% retracement. We were there for 3 days, and it didn't hold. But that's pretty much what we're looking at right now. That tells us that we're heading down, most probably to $46.43 per barrel, which is the 786 retracement of this move. And so we want to keep an eye on this, folks. These lower commodity prices and everything, I just don't understand how it can be bullish on stocks, because the second largest economy in the world is China, and we have they have some problems over there, but nobody knows what to do with it because they'll close the market. They've already closed half of it. They'll close the other half if it starts down. So it's not a freely traded market in any stretch. And there's only there's about 150 million people involved in that market as of out of 1.5 billion. So only 10% of the population is even involved with the stock market. So it's a large percentage of wealth, but given the number of people here in our country, probably 50% of the people own stock in some shape, or I don't know if they give illegal alien stock when they come in along with their free medical care or not. I'll have to check on that. Anyway, this is what it looks like with the oil. We're hovering here right at the 61% retracement. Frankly, it doesn't look like it wants to hold it, but that's neither here nor there. But we're getting a pretty good rally now in the stocks, which doesn't surprise me, because with Apple opening lower, people have been long this stock. They've got lots of profits. So if they could buy it a lot cheaper than they could yesterday, no reason why they shouldn't. We've rallied a good 30 points in the NASDAQ, and we've rallied over 10 points in the S&P so far. It's still a little early. We'll wait and see what happens, with the rest of the day. But we have some pretty significant resistance in these things now. Looking at it over, the fact is that, believe it or not, the NASDAQ has just made a 382 retracement of the whole move. Just now, it just hit it just now at one. In fact, my limit went off. That's how I caught it. It just made a 382 retracement in 7 minutes. That's not too bad. Not a world's record, but it's still it shows you how quickly these markets can rally. So we did make a 382 retracement of the whole move down. And believe me, folks, like I mentioned before, the pattern was there yesterday for the NASDAQ. Whether that's going to mean anything or not, we'll wait and see. But the overall breadth of the market, I just don't understand how people could even been bullish it by just looking at what's happening to the new highs to new lows, and what was happening to the number advancing issues versus declining issues. And there was more and more people selling the stock at all times. So these are the things that really question why these things got to where they got to. But I'm not sure. So we'll wait and see what really happens with this. That's basically the bottom line of what we're watching. So the next question. So we have a question. Good. Someone has asked me about Priceline, our all-time favorite. I haven't heard from Priceline Charlie from La Paz. I hope he's okay. I know he was going to short the stock. I don't know where he reshorted it, if he did. But if you're listening, Charlie, call in. We're all worried about you, buddy. Anyway, the stock has still been in lower highs in Priceline since May. We had the really nice 61% retracement down there in July. when the market was bottoming for everything else, when we had that big ABCD, and we'll see what's happening to that. So you can see Priceline has had 3 lower tops through here. It's down about $15, $16 today, so not too much happening. It had that straight run up with the rest of the NASDAQ stocks, so we'll see what's going to happen with that. So give me a second here. We have a question about the grain markets, and first I will start out with corn, because the corn had a very interesting pattern here just a few weeks ago, and we will see what's happening. We made a perfect in corn. This was about 7 days ago, last week. We made a perfect 61% retracement in the corn market, right up to exactly the exact number. The high on the corn was 443.5. And the 61% retracement was 443.25. You just can't get any more accurate than that. That's for sure. Now there happens to be an ETF for corn, and here's one of the things that I'd like to bring to your attention. I know you all know this, but we'll bring it again. This is going to be CORN is the ETF for corn, and I wanted you to notice this because you'll see that the corn futures, the September contract, made an ABCD pattern during the time period between October and May. It made a new high into early July. Now the ETF, the CORN, it could only make a 786 retracement. See, that's part of the problem that you have with these things. I don't know how they calculate this stuff, but that's not really fair to the person that wants to short corn, via the ETF, because it's not following what it should be doing. So they change these parameters, or it's set up to give them an edge like with options. That's the only thing I can figure. So ETFs are kind of tough to trade. So keep that in mind when you're watching these things. So we'll watch from this level here. Okay, now we have a next question was about the wheat market, and then after wheat we're going to cover the soybeans. And this usually do this on a Wednesday, but on a Thursday, but we're going to do it today because this is where the questions are coming in. And this is another reason why all these stocks are coming down. All the commodities are coming down, folks. It's not just the grains, and the grains had a really nice move, to fit. With the rest of the commodities, but we did have a big run up in wheat, over $1.50. Oh, it was $2 a bushel, $1.75 a bushel, and now we're coming down. We're below the 61% retracement. It looks we're going to go back to the $5 level, which will give some support to wheat at that point, because $5 has been sort of a bottom. Between $4.60 and $5 in wheat has been sort of a bottom with this. Okay, the next one we're going to take a look at, of course, is our November soybeans. And if we will put these up here, just give me a second here. There we go. We'll get it up here. And they're still quite a bit higher than they've been in the past. But give me a second and we'll be ready here. Okay. Well, someone's mentioned the question that the ETF for corn is not designed to track corn. Well, it sure looks like it's it's not designed to track September corn, but for a person that didn't have a commodity account that asked me that question, the only thing they could do was that CORN. So I don't like ETFs. That's just Warren Buffett says they're the weapons of mass destruction, but we'll wait and see. Okay, we made our low in beans back around Memorial Day, right around the 1st of June. Okay, then we had the big rally. It went $1.40 a bushel, about $7,000 straight up, and now we've given back it's come down about 30, 40, 50 cents. So we've given back about 25. Well, it went up to 7,500. And it's given back a third of that. So we're not even at the 382 retracement yet in the November soybeans. And we're starting the really key time for November soybeans from the middle of July through the third week in August. That's the most difficult time for beans as far as their pollination and stuff. And we're about 7 cents away from the 382. They're trading at 995 right now, and 984 is the 382 retracement. We unfortunately, what I usually do is I will go to a shorter term time frame to see if I can find a nice ABCD pattern that could take me, to that level of 987. And when I look at this on a half-hour chart, I really don't see anything that really pops out at me. We just had a beautiful ABCD coming down at the 786. That happened here. Well, this is a really nice one. As a matter of fact, you can see this beautiful Gartley that formed there just a couple of days ago on the 19th, and then we had a little bit of a rally, and now we're starting down again. So it's a little difficult to find an easy place to buy it. So that's the key to what we're looking at here when we're watching some of these things. So that's what we're watching here in the grains. We've covered wheat, corn, and soybeans. It looks like, we're still in the midst of a pretty good correction here. The bull market still might be okay, but you want to wait until Monday at least to see if some of this weekly support will hold after we get finished with this correction. We've come down about 40 cents a bushel in corn, and there should be very strong support around 3.90 a bushel in cash corn, which would be the September. And so we'll wait to see, what happens with that. I happen to be short the corn, and that's the area where I'm looking to, take the position off, and we'll wait and see if it happens. Whether it's going to do that or not, we have to remain to be seen. Now, the next one we want to take a look at is I want to get the currencies in here because we have some really interesting patterns happening in currencies. Well, first we'll take a look at the euro. As you can see, we've had a little bit of a bounce in the euro today. I think it's just a very, very, very small rally. It's been a 3-day rally. We took out the lows of March the 25th. Let's try that again. May the 25th by 3 pips in the euro. And then we turned. We've had a little 3-day rally, but it looks like the euro wants to go at least another 220 pips lower, down to that 106.70 level. But if we look at it, remember, the long-term fact is, we'll take a look at this. It's better to look at this longer term. It's a clearer picture, I think. If we look at this long term in the euro, you'll see that it is headed down. Now, the important part about this, folks, is the low that we made in March. On March 6th, we made a low in the euro, and then we rallied up into two months into the 15th of May. That tiny little ABCD correction could not even make a 382 correction. I mean, it was a very, very shallow rally. And that's what's happened here is we've had a tremendous shallow rally in the euro. And that's not a good thing on a long-term chart, because if that was a really major bottom there, it would have come out of there at least, somewhere. We rallied, 10 points? That's not very much. The last time we had a bottom like that, we rallied 23 points. So the rallies are just very, very shallow. And now we're starting to roll over again, and that tells us that we're most probably heading down, towards that par level or even 99 in the euro. I'm not sure what's going on with that Greek thing, that Greek exit, or whatever they call it, but that's neither here nor there. So we'll see what happens with that. Now, the next currency that I think is important is the Japanese yen, because it has Japan being the 3rd largest economy. Let me get that up here. There we go. Give me a second here. We've had a lot of resistance up here at this 124 that we posted in here before. We got to take a break, and we'll be back, and we'll finish up talking about the yen.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, the next chart was the Japanese yen versus the U.S. dollar. And as you can see, we've had some lower highs in this area. We just finished a 786 retracement up at that 124 and change level. So we'll see if that's going to mean anything. We'll have to wait and see if it does hold. But right now, for the last few days, it has been holding. Now, I wanted to end the show here had a question about the silver. I hadn't posted a silver chart, and I do want to put the daily silver chart in here. As you can see, silver so far has held above the November lows of $14.10 per ounce. That was way back right around Thanksgiving of last year. That's the little piece of dental floss that the precious metals are hanging on right now. We've just completed the beautiful ABCD in silver down here at the 1460 per ounce. We hit 1450 the other day. We're trading at 1470 right now. But with gold under so much pressure and platinum under pressure, it's interesting to see what will happen here. We have such an overbought. Let's try it again. We have such an oversold condition in all of the metals. They could easily have, a substantial rally, and they could easily melt down too. So you must be extremely careful, because we are at this major support, and it frankly doesn't hold, and it's going to break down with all the rest of the commodities. And I don't think that's good for stocks, but that's just my opinion. I just don't understand when you look at the transportation index and the following commodity prices. There's something not right with the goods and services. Now, I know a lot of it is social networking and Facebook and all the other stuff, but frankly, there's got to be something else out there that would make it interesting anyway to see why these things are where they are. And it could be, and it most probably might be, that this old cowboy's got it all wrong, but we'll have to see what happens with this before the fat lady sings, and we'll see what's going on. Okay, now we'll be right back, and that's it. Wow, the end of the show. Live every day in an attitude of gratitude, and we'll see you tomorrow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.